Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Hello and welcome. Today we're really diving into the latest from a tech giant. We're focusing on their Q2 2025 earnings call. That was July 31st, so very recent.
Right.
And this isn't just about the numbers, is it? It's more like a roadmap, looking at the innovations, the strategic pivots that are, shaping our digital world.
Exactly. These earnings calls, they're such a unique window. You get priorities, challenges, often way more than just the press release gives you.
Mm-hmm.
And this call, July 31st, it really lays out their moves in retail, cloud, AI, which is huge right now, and even some completely new ventures. It shows how they're trying to set the pace.
Absolutely. And we'll get into some really fascinating stuff, like how 1 million robots are changing their warehouses, the explosive growth in generative AI, maybe some surprising partnerships in ads, and even satellite internet.
Yeah, lots to unpack there.
So let's dig in and figure out what's really driving this massive company. IQ2 2025 financial overview, beyond the headlines. Okay, let's kick off with the main numbers for Q2 2025. Revenue came in at $167.7 billion.
Which is pretty solid. That's up 12% year over year when you adjust for foreign exchange.
Right. And operating income. That's a big jump. $19.2 billion, up 31% from last year.
Yeah, a very strong increase there. And their free cash flow, trailing 12 months, that's sitting at $18.2 billion.
So overall, the message from the top seemed, well, positive. They said something like good progress across customer experiences and businesses.
But it's really important to understand their mindset here. They talk a lot about inputs versus outputs.
Okay, explain that a bit.
Well, things like revenue, operating margin, those are outputs. They matter, of course. But the real focus internally is on the inputs.
So what are the inputs then?
Things they can control directly. Like in retail, it's about having wide selection, keeping prices low, making delivery super fast. Those are the levers they pull. And this isn't just talk. It genuinely guides how they make decisions, where they put their money. It lets them invest for the long haul, without just chasing quarterly numbers.
That makes sense. So by looking at those inputs, what they're actually doing, we get a better feel for the company's health, its direction, maybe more than just the final profit number tells us.
Exactly. It shows you the underlying engine, not just the speed reading on the dashboard. It really highlights how deep that customer focus runs. 2. The retail and stores business. Reimagining customer experience and efficiency. 2. The retail and stores business. Expanding selection and brand appeal.
All right, let's shift gears to their retail side. Huge part of the business, obviously, and they're making some interesting moves in selection.
Definitely.
Like the return of Nike products, that was a big point on the call, wasn't it?
Yeah, that got a lot of attention. A major brand back in the fold. But it wasn't just Nike. They highlighted adding premium brands, too.
Like Away luggage, right? And Aveda, Marc Jacobs fragrances.
And even pushing into luxury more. They mentioned brands from Saks, Dolce & Gabbana, Stella McCartney, La Prairie Skincare.
So what's the strategy there? Just adding more stuff?
Well, it's more than just SKU count.
Yeah.
Bring in these kinds of brands. It really broadens their appeal. It elevates the whole shopping experience.
Attracting different kinds of shoppers, maybe?
Exactly. Moving beyond just the everyday basics.
Yeah.
It positions them as a more, comprehensive destination, trying to capture more discretionary spending. It's about image, too.
Interesting. And it wasn't just high-end stuff. They also talked about groceries or perishables.
Right, the perishables pilot, they're expanding that. So customers can get fresh items delivered same day, along with other things they order.
And the uptake sounds pretty strong.
Yeah, the numbers were quite striking. 75% of people using it this year were first-timers for buying perishables there. And get this, 20% of those first-timers came back multiple times within the first month.
Wow. That suggests it's sticky.
It really does. And think about the logistics behind that. Integrating fresh food into a same-day network. That's complex.
For sure.
It shows their supply chain muscle. And the goal is clear. Make the platform indispensable for daily needs, not just occasional buys. Capture more of that total household budget. B, pricing leadership and value proposition.
Okay, selection is one thing. What about prices? That's always been core to their brand.
Absolutely. And they hammered that point home again, the everyday essentials category.
Yeah.
Growing faster than the rest of the business globally.
1 out of every 3 items sold, they said.
Which tells you value is still a huge driver. And it's not just them saying it.
Yeah.
There's that research firm, Futrim. For 8 years straight, they found this company has the lowest prices among U.S. retailers.
8 years, that's consistent.
Incredibly consistent.
Right.
And that builds enormous customer trust. It gives them a huge competitive edge, makes them resilient, whether the economy is good or bad, it's foundational. C, the blockbuster Prime Day event.
And speaking of retail strength, Prime Day in Q2, they called it the biggest ever.
They always seem to say that, but the numbers usually back it up.
Yeah, record sales, record number of items, and apparently record Prime signups in the weeks leading up to it.
Which is key. Prime Day isn't just about the sales spike during the event itself.
It's about pulling people into the ecosystem.
Exactly. It acquires new Prime members, deepens loyalty with existing ones, and critically, it's a massive platform for their third-party sellers.
Right. They mentioned sellers had their best Prime Day ever, too, especially the small and medium businesses.
It's a symbiotic thing. More sellers, more selection, better deals, brings in more customers, which helps the sellers. It fuels the whole flywheel. D, navigating tariffs and economic uncertainty.
Now, what about the wider economy? There's always talk about tariffs, inflation. How does that play into their retail business?
They address that. And pretty candidly, actually.
What did they say?
Basically, that it's impossible to know what will happen, where tariffs will land, especially with China, or what the real impact will be once any pre-bought inventory runs out.
So a lot of uncertainty. Who eats the cost if prices go up?
That's the million-dollar question. But interestingly, what they have seen so far in 2025 is no real drop in demand and no significant price increases across the board.
Why is that?
They pointed to the sheer diversity of their marketplace, over 2 million sellers.
So different sellers might absorb costs differently.
Precisely. Some might pass it on, some might not. That variety creates a sort of buffer for customers, increases the chance they can still find competitive prices somewhere on the platform. It's marketplace dynamics at play. E, accelerating delivery speed and network optimization.
Okay, let's talk speed. Delivery speed seems like an obsession for them.
A relentless one, yeah.
Yeah.
They detailed major changes to their U.S. inbound network, re-architecting it into regional zones.
The idea being to get products closer to customers.
Exactly. Closer inventory means faster delivery, and it's cheaper to ship shorter distances. It's about optimizing right from the start.
And are they seeing results?
Oh yeah, tangible ones. Over 40% year-over-year jump in orders going through those direct lanes, straight from fulfillment to delivery.
Skipping steps.
Right. And that led to a 12% cut in average package travel distance and almost 15% fewer times each package gets handled.
That sounds like real efficiency gains.
Huge gains. And saves money, obviously, but it directly translates to faster delivery for the customer. Win-win.
They also mentioned order consolidation, getting more items in fewer boxes.
Because inventory is closer, they can group items for an order more easily. Fewer boxes, less packaging, lower costs again.
And all this led to a new global speed record in Q2 for Prime members.
That's what they claimed. And in the U.S., 30% more items delivered same day or next day compared to last year. That's a massive acceleration.
It really changes expectations, doesn't it? Things you used to run to the store for now just appear.
It blurs the lines. And their ambition here is pretty staggering. They plan to expand same day and next day to tens of millions more people in over 4,000 smaller cities, towns, rural areas by the end of the year.
Wow, reaching beyond the big metro areas.
Way beyond. They've already covered over 1,000. And the early signs. Customers in those areas are shopping more often, buying more household staples. It's fundamentally changing retail access. F, the role of automation and robotics.
And behind a lot of this efficiency, there's automation. They hit a big milestone, 1 million robots deployed globally.
1 million. It's hard to even picture. And it's not just numbers. They talked about specific tech, like automated package sorting in the last mile centers.
And tech that brings packages right to employees,
Yeah.
ergonomically.
Yeah, reducing physical strain, making the job safer and easier. And then there's deep fleet.
Deep fleet, what's that?
Think of it like air traffic control, but for the robots inside the warehouse.
Okay.
It optimizes their routes, avoids traffic jams, cuts down on bottlenecks. They said it improved robot travel efficiency by 10%.
Which, at their scale,
is enormous. 10% across 1 million robots. That's a huge deal for speed and cost.
So robots mean faster, cheaper delivery for us and safer jobs for their teams.
That's the narrative, and the results seem to support it. Robots handle the heavy lifting, the repetitive stuff.
And they said this is just the beginning with robotics and AI.
Exactly. Just getting started. That was the phrase. Hinting at a future where this combination could completely revolutionize logistics. We're probably only seeing the early stages. 3, Amazon ads. Precision, reach, and strategic partnerships.
Okay, let's switch over to Amazon ads, another area showing really strong growth.
Very strong. $15.7 billion in revenue for the quarter.
Up 22% year over year. That's impressive growth for an already large business.
It really is, and it's across their whole portfolio, from ads on the retail site to video ads and beyond.
The reach they have is just incredible, isn't it?
Staggering. In the U.S. alone, they average over 300 million people seeing ads across their properties each month.
And that's not just the website. It's Prime Video, Twitch, Fire TV.
Live sports now, too. NFL, NASCAR, soon the NBA. It's this whole integrated ecosystem. Advertisers love that. They can reach people in so many different contexts.
And they have this platform, Amazon DSP, demand-side platform. How does that work?
It's basically the tool advertisers use to manage their campaigns, plan them, run them, measure how well they did.
What makes it special?
The data. They talked about trillions of proprietary browsing, shopping, and streaming signals.
Trillions, wow.
Yeah, combined with all their supply-side connections and these secure clean rooms for data sharing, it gives advertisers incredible precision.
So they can target ads really effectively.
Extremely effectively. Find the right audience, show them relevant ads, and measure the impact on sales. It drives efficiency for the brands and, ideally, means more relevant ads for us consumers.
And they're expanding this reach even further through partnerships.
Nip time. They highlighted a huge deal with Roku.
Giving advertisers access to Roku's audience through Amazon DSP.
Yep, 80 million connected TV households. They called it the largest authenticated CTV footprint in the U.S. That's massive.
And the Disney deal, too.
Right, integrating with Disney's Ad Exchange. That gives direct access to premium inventory on Disney+, ESPN, Hulu, leveraging insights from both companies.
So they're making a major play for the connected TV advertising market.
Absolutely. These partnerships position them as a central player in cross-platform advertising. They can offer brands unparalleled reach across online retail, streaming video, live sports, the whole digital landscape. Amazon Web Services, AWS, fueling the cloud and AI revolution. For Amazon Web Services, AWS financials, and market leadership.
All right, let's turn to the powerhouse.
Yeah.
Amazon Web Services, AWS, how did they do?
Still growing strong. $30.9 billion in revenue for AWS in Q2.
That's up 17.5% year over year.
Which puts them on an annualized run rate of over $123 billion, just enormous scale.
And this growth is coming from AI or their traditional cloud business.
Both, actually. They were clear about that. Generative AI is definitely a driver, but companies are also still moving their core workloads to the cloud, accelerating migrations they already started.
Now, some competitors might show higher percentage growth sometimes. How did they address that?
They pointed to their base. AWS is just significantly larger. The number 2 player is only about 65% of AWS's size. So growing 17.5% on that massive base is still incredibly significant growth in absolute dollar terms.
Makes sense. What do they see as their key advantages?
They consistently emphasize operational performance, reliability, speed, security. They even made a subtle dig about adventures at other cloud providers recently.
Ouch.
And they stress their advantage in sheer functionality, both core infrastructure and the whole AI stack, end to end.
And they mentioned having more demand than supply, especially for AI.
Yeah, which is, a good problem to have, as they say. It signals really strong customer adoption and confirms their leadership position, even to it creates some short-term bottlenecks. B, generative AI innovations, hardware and software.
So diving deeper into that generative AI piece, they described it as a large, fast-growing, triple-digit year-over-year percentage multi-billion-dollar business.
Yeah, it's clearly moved beyond experiment into a major revenue engine. And they're investing heavily across the board.
Starting with hardware. They have their own chips, right?
Right. Trainium 2, their custom AI training chip. They said capacity is ramping up, and it's now the backbone for Anthropic's latest Claude models and for their own Bedrock service.
And they're using NVIDIA chips, too.
Oh, yeah. They launched new instances using NVIDIA's Grace Blackwell superchips, calling them their most powerful GPU instances. So they're offering both custom and partner hardware.
Okay, what about the software side? Bedrock seems central.
It is. They added Anthropic's Claude 4 model to Bedrock and called it the fastest growing model they've ever had on the platform.
And their own model, Nova.
Amazon Nova, yeah. That's now the second most popular on Bedrock. Its advantage, they say, is letting customers customize it with their own data and expertise while keeping an eye on cost and speed. That flexibility is key for businesses.
They also talked about making it easier to build AI agents.
Yes, that seems to be a big focus. Building agents is exciting, but deploying them securely and at scale is hard.
So they launched tools, Strands and Agent Core.
Right. Strands is an open-source tool to help build agents easily. Sounds like it's getting good traction in the developer community.
2,500 stars on GitHub, 300,000 downloads.
Yeah, strong start. And then Agent Core within Bedrock is designed for the deployment part. Secure, scalable runtime, identity management, memory, all the tricky bits needed for enterprise use. The idea is to unblock companies so they can actually use these agents more widely. See transformative AI applications.
And they gave examples of what these agents can do. AWS Transform.
Yeah, that sounded pretty powerful. An AWS agent that drastically cuts down mainframe modernization projects from years to months.
That's a huge pain point for big companies.
Massive. And it also speeds up moving from VMware or from .NET on Windows to Linux, saving significant licensing costs, real practical business value driven by AI.
Then there was Kiro, the coding agent. That generated a lot of buzz.
Huge buzz. Hundreds of thousands of developers signing up for the preview almost immediately.
What makes it different? They mentioned vibe coding.
Yeah, basically chatting with the AI in natural language to build and refine software specs. Instead of just getting code snippets, it helps structure the whole process.
And it has these agent hooks, like an experienced developer looking over your shoulder.
Exactly. It can automatically update test files when you change code, update documentation when APIs change, even scan for security issues like leaked credentials before you commit code.
So the potential is to really change how software gets built.
That's the vision, making it much faster and easier to go from an idea to a working application. And tying this back to the overall market.
The on-premise spending.
Right. 85–90% of global IT spending is still on-premise. That's expected to flip over the next 10–15 years. AI is going to accelerate that shift dramatically. And AWS sees itself as perfectly positioned to capture that transition, to use supply constraints and optimistic outlook.
But they did admit to supply constraints, demand outpacing capacity.
They did. They were open about it. Power is the single biggest bottleneck right now.
Power for all those data centers and AI chips.
Exactly. Plus occasional issues with chip supply or manufacturing yields. It's a complex supply chain.
How long will that last?
They said it'll take several quarters to fully resolve, but they expect things to get better each quarter.
So it's a constraint, but also a sign of incredible demand.
That's how they frame it. A $123 billion run rate business that's still supply constrained because demand, especially for AI, is so high. Kind of a pretty unique situation. They're optimistic about acceleration later this year and into 2026 as more capacity comes online and more companies deploy AI. Broader Amazon ecosystem, new frontiers, and continued growth.
The next generation assistant.
Okay, moving beyond the two giants of retail and AWS.
Mm-hmm.
What else is happening in the ecosystem? Alexa Plus got to mention.
Yeah, the next-gen Alexa, powered by generative AI, it's rolling out in early access now to millions in the U.S.
And the feedback.
Very positive, apparently. They stressed how much better it is than the old Alexa. More intelligent and crucially capable of taking a lot of action.
Like what kinds of actions?
Complex stuff. Orchestrating multiple smart home devices at once. Draw the curtains, turn on the porch light, adjust the thermostat, play some music, all from one natural language command.
Okay, that's pretty advanced.
Also playing specific music or video, moving music between rooms, even linking music to scenes in Prime Video movies. It's about making it more useful, more integrated.
And people are using it more. Higher ratings.
That's what they reported. Higher ratings, broader use cases, more interactions overall. The U.S. rollout should finish soon, then international later this year.
What are the business side? How does this make money?
Well, more utility means more use, which could drive sales of Alexa devices. It can integrate shopping more seamlessly, advertising opportunities in those longer conversations, and maybe, down the line, a subscription.
They mentioned pricing.
It's free for Prime members currently, but $19.99 a month for non-Prime. They said it's very early days on the monetization front, but the potential is clearly there if the experience really takes off. B. Project Kuiper. Connecting the unconnected.
Another big future bet. Project Kuiper, their satellite internet project. They had a successful launch.
The third successful launch, yeah.
Yeah.
Building out that low Earth orbit constellation. And what's interesting is the customer traction already.
Enterprises and governments signing up before it's even commercially available.
Exactly. Which points to a huge unmet need. They estimate 500 million households worldwide still lack broadband.
The digital divide.
Absolutely. It impacts everything. Education, business, access to information, entertainment. Plus, businesses and governments need connectivity in remote locations.
How do they see the competition? There's Starlink, obviously.
Right. They basically see it becoming a two-horse race in modern LEO satellite tech, Kuiper and the incumbent. They're planning to differentiate on performance, claiming an up-downlink advantage and offer very compelling pricing.
And the AWS connection is key here, too.
Definitely. They have relationships, consumer, enterprise, government, and once Kuiper brings data down, AWS is right there for processing, analytics, AI. It's a natural synergy.
Any delays, launch schedules can be tricky.
They acknowledged some delays with rocket providers, yeah, but they said they've secured most of the launch capacity they need for the next couple of years. Commercial beta is expected late 2025 or early 2026, so it's moving forward. See Prime Video, live sports, and entertainment.
Prime Video also got some airtime. Live sports seems to be working for them. NASCAR numbers were good.
Yeah, about 2 million viewers per race in the first season. And crucially, the youngest audience among NASCAR broadcasters in over a decade. Attracting that younger demographic is key.
And they're gearing up for the NBA with a
Yep.
big broadcast team.
A really big team. Ian Eagle, Stan Van Gundy, Kevin Harlan, Dwayne Wade, Dirk Nowitzki, Steve Nash, Candace Parker. I mean, that's a star-studded lineup. Shows serious investment in the production quality.
And on the movie side, the next James Bond film.
Directed by Denis Villeneuve, Academy Award nominee. That's a huge get, putting one of the biggest movie franchises in the hands of a top-tier filmmaker.
So sports, big movies. It's all about making Prime membership stickier, more valuable.
Precisely. It enhances the value prop, drives engagement, attracts new subs. It expands the ecosystem well beyond just shopping in cloud. It makes Prime harder to live without. Amazon Pharmacy's continued expansion.
One last area they touched on, Amazon Pharmacy, still growing.
Growing fast. 50% year-over-year growth so far this year, and that's on an already significant base.
So their push into healthcare is gaining real traction.
It certainly seems so. It shows they can enter these complex, regulated markets and build a substantial business. It leverages their logistics, their tech, their customer base. It's another quiet expansion that could become very significant over time. Sixth Chief Financial Officer's perspective, driving profitability and future investment. Sixth Financial Officer's perspective, A segment, performance and profitability.
Okay, let's bring in the CFO's view. More detail on the financials and operations. Overall profit beat guidance, right?
Yeah. Worldwide operating income was $1.7 billion higher than the top end of their guidance range, though about $1.5 billion of that beat was due to favorable currency exchange rates.
Still, strong underlying performance.
Yeah.
How did North America do specifically?
Very strong. $100.1 billion revenue, up 11%. Operating income hit $7.5 billion. That's up $2.5 billion year over year. And the operating margin climbed to 7.5%.
Almost 2 points higher. The CFO credited operations teams.
Strong execution, yeah. And international also had a good quarter. Revenue up 11%, excluding currency effects, hitting $36.8 billion. Operating income was $1.5 billion, a big jump from last year. Margin there reached 4.1%.
And the CFO broke down international, established versus emerging markets.
Right. The UK, Germany, Japan, the established ones, are showing margins similar to the US now and driving profits. The newer markets, the 8 launched in the last 5 years, are still developing but making very nice improvements in selection, prime adoption, customer offerings.
It's a long-term play in those regions.
Exactly. But overall, international has seen sustained improvement, almost 7 percentage points of margin gain over the last 10 quarters. It's paying off.
And unit growth was strong. Paid units up 12%.
Yep. And third-party sellers hit a record 62% of units sold, up another point from last year. They're becoming even more crucial.
How does this tie back to the efficiency gains?
The CFO connected it directly. Better inventory placement, higher volumes, better seller inventory. It all feeds into the transportation network performing better.
Like outbound shipping costs growing slower than unit volume.
Exactly. Shipping costs up 6% while units grew 12%. That gap shows real structural efficiency improvements are happening. Less cost per unit shipped.
And they're still pushing on that. Strategic inventory placement.
Constantly. Better stock levels, shorter routes, faster delivery, more items per box, less packaging. It's a continuous optimization effort.
What are the key initiatives driving this now?
Improving the inbound network further, expanding those same-day facilities, especially into smaller towns, and, of course, more robotics and automation.
So margins might fluctuate quarter to quarter.
But the underlying strategy is for sustained progress over time. Oh, and advertising keeps contributing significantly to profit, too, across both North America and international. AWS margins and capital expenditures.
Now let's tackle the AWS margin question. It dipped in Q2 from a record high in Q1. Why?
The CFO broke it down. About half the decline was seasonal stock-based compensation hits harder in Q2 due to timing.
Okay, so that's expected. What else?
Higher depreciation expense. That's a direct result of all the money they're pouring into new data centers and hardware, their rising CapEx.
Makes sense. Invest more, depreciation goes up.
Right. And some unfavorable foreign exchange effects also played a role. The main message was expect AWS margins to fluctuate because they are investing so heavily right now, especially in AI capacity.
Speaking of CapEx, how much are they spending?
Cash CapEx was $31.4 billion in Q2 alone, and they expect spending to stay around that level per quarter for the rest of the year.
Wow. That's a huge amount of investment. Where is it going?
Primarily AWS, building out capacity for cloud services, especially AI. That includes their custom silicon like Trainium, but they're also still investing in the retail logistics, network fulfillment, transportation, same-day sites, robotics.
So, heavy investment across the board.
Very heavy, but it's all framed as investment to support growth for many years to come, playing the long game. See Q3 2025 financial guidance.
So looking at a Q3, what's the guidance?
Net sales guidance is between $174 billion and $179.5 billion. That includes a small expected boost from foreign exchange.
Yeah, and operating income.
A pretty wide range, $15.5 billion to $20.5 billion.
How did the CFO characterize that outlook?
Cautiously optimistic, based on Q2 momentum, current trends, but also acknowledging macroeconomic factors like tariffs.
And they ended by reinforcing their core philosophy.
Yeah, focusing on customer value selection, price, convenience, as the only reliable way to create lasting value for shareholders. It always comes back to that. 7, internal generative AI adoption, transforming the way we work.
There was one more really interesting theme, how they're using AI internally. They made a pretty bold claim about AI's impact.
Huge claim, calling AI the biggest technology transformation in our lifetime. Bigger than the internet, bigger than mobile, bigger than the cloud.
That's saying something. How do they see it changing things?
2 ways. Transforming customer experiences, obviously, but also very substantially changing the way we work inside the company.
Across all functions.
Pretty much. Coding, analytics, research, finance, automating business processes, customer service, AI touches everything.
And their approach is to actively shape this, build their own tools.
Exactly. Embrace it and help shape it, not just react to it. Build the tools internally that leverage AI effectively for their own teams.
Like Kiro, the coding agent we talked about.
Precisely. Helping their own developers invent faster, start from a more advanced point. And AWS Connect, their call center software. The integrated AI there is making customer service agents significantly more productive.
So it's about boosting internal productivity and innovation.
Yes, ultimately to invent more, faster for customers, but also, interestingly, to make the jobs themselves much more enjoyable.
By reducing the grunt work.
Right. Automating the rote tasks lets people own more pieces of what they're trying to solve for customers. More creative, less tedious work.
It's kind of a blueprint for how other large companies might integrate AI deeply into their operations.
It really is a large-scale, practical demonstration of AI, not just as a product, but as a fundamental change agent for how a global enterprise actually functions day to day.
Outro. So wrapping this all up, what's the core story from this Q2 call? It feels like relentless efficiency combined with massive bets on the future.
I think that's right. You see the intense focus on optimizing current operations, delivery, speed, costs. But at the same time, these huge strategic investments in next-gen tech like AI, like Kuiper.
And always that undercurrent of customer value driving decisions across retail, AWS, ads, everywhere.
Absolutely. They strike this balance, delivering strong results now while aggressively investing for a future where AI and global connectivity are central. They're not just adapting, they're trying to architect what comes next.
It leaves you wondering, doesn't it? As they keep blurring these lines between retail, cloud, AI, how will this integrated strategy change things? Not just how we shop, maybe, but how whole industries work, how we live our lives in the next few years.
It's a profound question. The scale of their ambition is immense.
Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.